Okay, I'm talking to David Mercer, CEO of LMAX Exchange. David, good morning.
Morning.
Interesting times out there.
Sure.
Obviously, it's a very competitive market. What does it take to succeed in the multi-dealer world that we currently live in?
I think it's not that different to every other industry or business in this modern era. You've got to focus, first of all, on customer. That's our primary focus. Second of all, great technology. Third of all, quality staff. So when you run a regulated MTF like us, we've got two types of customer. First of all, you've got the buy side, so from brokers to funds, and now banks on the interbank platform. And then you've got your liquidity partners. So let's look at, the first set of customer. What are they looking for? I guess it's fivefold, and it's, not rocket science. I mean, number one, they want great pricing. So it's the spread they see and the commission they pay. Second of all, they're looking for quality, robust, firm liquidity. So not last look liquidity. Obviously they want a range of products, so we offer 62 currency pairs, commodities, precious metals, and a range of indices. And then the tricky bit is how do they access those products on your platform? These days they're very sophisticated, so you must offer a range of APIs. We've got Fix, Java, .NET. You've got your own UI, you've got third-party UIs, you've got bridge providers. And probably the fifth thing is clearing. Something we're going to discuss, I guess, more today. We're probably the only venue, the only exchange that offers PB solutions, central counterparty on the interbank side, and centrally cleared with the LCH. So it sounds easy, but if you put all that together, then ultimately the client benefits, and as a venue, you will benefit through increased volumes and increased revenues.
So going forward then, do you need to look at how you sort of manage those four different sort of clearing solutions?
A little bit. I mean, we've got great PB relationships with BNP on the professional side, with Rabobank as a central counterparty, with central clearing we use LCH right now. We have to move into doing more institutional give-ups. We now offer a prime of prime solution. So yeah, I mean, again, it's focusing on the customer needs, so delivering what they want. If we deliver what they want, then as a venue and as an industry, we'll do well.
In terms of that sort of strive to differentiate yourself, you have a successful model. Is it likely to be replicated?
It might be. Funny enough, I think it's too easy to stand out at the moment. We're the only guys with an open order book, streamed limit orders, and the quality and consistency of exchange execution. Now, clients tell us they like it. Clients compare us to everything else that's out there. They compare us to the last look liquidity pools. They compare us to the ECNs. So we're on a panel later with more exchange type evangelists, and I'd like more of that. I think the competition is good. So I think for us, we stand out. The differentiation is clear. It wasn't so clear maybe 18 months ago. People had to experience it. Just like picking up an iPad, they've got to see the difference in their trading and the quality, the cost efficiency, and more profitable their trading becomes through using it. So I think right now we stand out. I look forward to the competition. I welcome all the new venues, and for sure it will be survival of the fittest. Again, you put control in the hands of the customer.
Did your ability to build volumes over the last year really help in terms of giving you a credibility that maybe wasn't there 18 months ago?
Sure. I mean, I think it was difficult. I mean, let's not forget, the second set of customer I talked about, which was your liquidity partners. How do you persuade, these behemoths, these great banks, institutional liquidity providers to stream non-last look limit orders into a venue with no volumes? So, if you look back 20 months, we had 3 liquidity providers. Now we have 14, and there's a pipeline of more, and these are top names. So yes, it's with every exchange, it's a self-fulfilling prophecy. Volume, flow begets flow. And what happens with the liquidity providers is that they compete for the flow, and that ends up benefiting the end user, the end customer.
And clearly they're quite happy with the model because the interbank exchange launched fairly recently. Do you want to talk about that?
I think with interbank it was natural for us. Again, they're our customers. There are liquidity partners. They're looking for other venues, they're looking for another way to do it. There's other players out there. So actually, we answered client demand. They said, any chance of you putting a venue up, well, we can match. Because on the professional exchange, the banks don't match with each other. They provide liquidity into buy-side clients. On interbank, they can match together. So there's a big crossover between our liquidity partners on the professional exchange and the bank members, again, with a published rule book on the interbank exchange. Now, that exchange has been up and running only for 2 months. It's had 100% uptime for those 2 months. The flow is small. We do a few hundred trades a day, a few hundred million a day. We're proving the concept. We see that moving. We don't expect significant yardage in the next 6 months, but we think we should be a player in the next 12 to 18.
And alongside that, you've got your traditional sort of broker-dealer platform, which is also seeing growth.
We've had monthly compounding growth of 20% a month for the last 20 months. So, you know, we've been around now for 2.5 years. People forget that. So we had a false start, admittedly, for the first 6 to 9 months. Since we refocused the business on that institutional space, on the broker-dealer space, we've seen consistent growth of, as I say, 20% monthly compounded revenues, client acquisition, and volume. So we need to keep that going for the next year and become a significant player in that space, and then hopefully move into the institutional and interbank segments as well.
David, thank you.
Thanks, Colin.